Hello, welcome to Spiderweb Signals. I am Mr. Spider and I'm going to try and run through a few things in terms of helping your trading and going over what I do and what I don't do to some extent. So looking at some of the different trading techniques you'll find discussed on the web and on YouTube. And one of the first one I want to talk about is scalping. So I don't like scalping, and this is why I don't like scalping. By taking a scalping position, you're going against the momentum. And in any market, be it forex, be it crypto, be it oil, commodities, this can be a dangerous thing to do because gauging momentum, gauging the ferocity of momentum is always difficult. So what that happens is you're going to get stopped out a lot. And setting stop losses and your profit targets is very important with this strategy for that reason. You're trying to get the top, you're trying to find the top or the bottom. You're scalping. Even the best scalpers that I've known, they have a win-loss ratio that's too close to 50-50. It might be 45-55, might be 60-40, the very, very, very best. But it's too close to 50-50 for me. And what this means is that they are liable to go on winning streaks and losing streaks similar to a casino game, i.e. roulette. Have you ever seen 6 or 7 reds in a row on the roulette wheel? Or 6 or 7 blacks in a row on the roulette wheel? And these streaks happen all the time to scalpers. And more often than not, like roulette, they'll go bust long term. So, Spiderweb Signals, Mr. Spider, me, I don't like scalping. Next up is momentum trading. This is equally as popular on the internet as scalping and equally as dangerous and difficult to master. I'm going to show you an image now. Take a look at that. When trading momentum breakouts, you've often a large area you need to cover with a stop. Now, this is going to vary depending on the trader and your setup as a whole, but inevitably momentum trading or breakout trading, you're going to be left with a big gap behind you by the time you enter. You're trading on a price breakout. You're trading on a price dictated momentum movement, and that is a problem. And like scalping, the problem is the success rate, and also in worse than scalping is the often massive stop that traders will incorporate into their trade. Over time, too many momentum traders are caught out buying too high or shorting too low. They are obviously clashing with the scalpers. The momentum traders are saying, right, this is going to continue. The scalpers are there saying, no, it's not. Ready to scalp you. In direct competition with one another. And the momentum traders are too often caught out buying too high, shorting too low, large stops and poor success rates, and kill this strategy for most traders. And Spiderweb Signals does not like price-driven momentum trading for those reasons. Next up is Spiderweb Trading Signals. What do we do? Well, you've heard the phrase, there is no such thing as a free lunch. Well, I've given you a free snack or two already by highlighting the dangers of the two aforementioned strategies, i.e. scalping and momentum trading. But what we do differently is we look to catch the momentum before the price knows it. That's what we focus on. We understand many different technical indicators, reviewing order book information, overlaying that with a multitude of convergences over different time frames. And there's even more to it than that, of course, which is why it's difficult to teach trading, as there is, in my experience, no substitute for poring over charts for hours and hours every day for your years and years. There's no substitute for that. Let's look at a couple of things, okay? So let me throw you a few bones, okay? Candle staircasing, right? Let's have a look. Have you ever seen candles sort of closing and forming a staircase. And candle staircasing is an interesting thing, which time and time again stands out. And when you see a staircase of candles alongside other technical supporting factors, think of yourself ascending a staircase that you're not familiar with a blindfold on. Okay, so somebody's kidnapped you, thrown you in a van, put a blindfold on you and said, climb this staircase. You've never been to that staircase before, and you're not told how many steps are ahead of you. So you're climbing the staircase. Now, you've no idea how many steps ahead of you, and when you see a staircase on a chart, that can also be a powerful indicator of further momentum, i.e. more steps ahead. So like you ascending the staircase with the blindfold on, you don't know when the last step is going to occur or not. You know it's going to occur, but you don't know when the last step is going to happen on the staircase. Similarly, when you look at a staircase on candles on a chart, you don't know when the last step is going to occur. So right there, staircase, powerful indicator of further momentum, potentially, coupled with other supporting technical factors. And conveniently, staircase candles also present you with good entry points and short stop opportunities, i.e. you enter just prior to the candle registering the next step on the staircase, the next candle that forms the next step. Because the presumption is that with a staircase, it's as soon as you enter prior to the candle registering, the next candle is going to open and ascend. That's presuming you're going long on the staircase going up. Of course, the opposites will hopefully happen. If you're going short, the staircase will go down. So to sum it up, what we do differently compared to scalpers, compared to price momentum trading, what we are trying to do always is we are trying to capture the momentum of the given market before the price knows it. So we are trying to beat all the amateurs, all the other traders, all the bots. We're trying to beat them to it, so we get the preferential price. And that is why our signal service is so valuable. That is why it's so valuable. That's why there's not... And that is the if you look at our success rate is A, we're putting out good signals to our subscribers, and B, look how long those signals are profitable for. Quite often we do not sell we often leave a lot on the table. If we've hit one-to-one risk-reward target, we're happy because have you seen our success rate? Our success rate is very, very good. And we do often seek further targets. If we go beyond a one-to-one risk-reward ratio, we often adjust our stop to break even, and we'll look at hitting those 2-to-1, 3-to-1, 4-to-1 risk-reward ratio targets. And but yeah, so that sums up why we're different. We are looking to catch the momentum before the price knows it.